Are you panicking about the crypto market right now? After some all-time highs earlier this year, it may seem like a bubble might have burst. Are we going to come out of it? Could secret large-scale investors be the cause of all this volatility? Welcome to Money Viral. I want to be your go-to guide for all things crypto-related and make it easy for anyone to understand this sometimes complicated system. In today's video, we are going to talk about the recent dumping of Bitcoin and if what we are seeing in the crypto sphere is related to major companies' investments. If you're into this kind of information and want to keep up to date with the latest in trends and content, be sure to like this video and subscribe to my channel to attract money into your life. If you follow financial markets at all, you know most trading is cyclical. There are booms and busts, times to invest and times to sell, depending on how long you want to hold on. Like Kenny Rogers saying, you've got to know when to hold them, know when to fold them, know when to walk away, and know when to run. Because the world of finance is a gamble regardless of what you invested in. There are no certainties in business, just good hunches. Bitcoin as a currency lives on a 4-year cycle. Workers mine it, more supply enters the market. There is a halving where inflation of the currency is corrected and scarcity comes back. Supply decreases and demand increases, causing a bullish market. We then see a bit of time of plateauing where traders keep the price fairly level before the cycle starts again. Bitcoin last halved in May of last year, when we saw a massive hit on the price, followed by some of the fastest growth the currency has seen. The major questions here are, why did we have such a fast growth and is the cycle changing? After almost a decade on the scene, why did we see such fast-paced growth over the past year? Well, more adoption and interest from the general public, like all of us, is one portion of it. However, large corporations buying into the sphere and promoting it did a lot of the heavy lifting. Lesser-known businesses like MicroStrategy, a business intelligence company, bought $250 million in Bitcoin last August, deciding to use it for reserves and continued buying to a total of 71,079 Bitcoins. In February of this year, that was almost $3.1 billion worth of Bitcoin. There is also Galaxy Holdings, an investment company that focuses on digital currencies, said in its Q3 2020 earnings that it had $176.4 million in Bitcoin as of September 2020. Then, of course, there was the major news of PayPal entering the ring of crypto trading. Never to be left out, the titans started accumulating. Jack Dorsey, Mr. Twitter himself, is also the founder and CEO of Square, that handy handheld transaction device, also bought heavily into Bitcoin. Square has reported 38,250 Bitcoins on its balance sheet for a value of around $1.5 billion. Let's not forget Elon Musk. Tesla's $1.5 billion investment revealed in an SEC filing on February led to huge gains for Bitcoin earlier this year. While some actively promote the crypto market space, there are plenty of institutions saying one thing while doing another. Big banks like JP Morgan Chase, Citibank, and Goldman Sachs and more are the ones telling people outwardly that cryptocurrencies like Bitcoin are doomed to fail, all while quietly adding more and more crypto investments to their balance sheets. This gets to the heart of our question today. Are these large-scale investors manipulating the market? If it were your business to make and hold money, would you feel threatened by such a shift in the public's opinion? Wouldn't you want to hedge your bets? It would not be at all surprising that these large companies are finding ways to control and influence the market, to scoop up more assets at the lowest price possible. These are the groups and people who have been affecting the stock market for decades. It only makes sense that they could be buying, dumping, and buying again to increase their positions. They would be blind if they couldn't see that the world would like to be rid of big banks in general. The Occupy Wall Street movement after the crash in 2008 put a lot of fear into the system. And now, with the emergence of DeFi, where people put up their crypto holdings as loans, banking institutions may worry they'll become obsolete if they don't adapt. Regardless of cycles or institutional buy-in, there is always a human element to consider. You have probably heard of the phrase FOMO, or fear of missing out. When you go to bed, the market is level, but when you wake up, it is on an exponential rise, which then causes many people to cash out. Because this is a global market running 24/7, people take profits, and then more people buy in. There is also a term called FUD, fear, uncertainty, doubt. The general public may view FUD as a reason to sell and cash out, while long-term, cash-flush retail investors and even governments see a golden opportunity to buy in bulk at a low rate. Global speculation leads to a lot of fluctuation in pricing for the crypto sphere as well. This whole concept of a 24/7 global market is brand new, and what's happening in one part of the world can greatly affect the profitability of the crypto marketplace. Some countries like China are trying to get rid of cryptocurrencies because they see them as a threat, while a country like El Salvador just broke brand new ground by accepting Bitcoin as an actual functional currency. So, should you be investing now with the market as it is? I am not a financial expert, and I encourage you all to make smart decisions with your money by really looking into the projects you want to invest in. I will say that there may be a good opportunity to buy in now while prices are low. You need to keep in mind where we are in the cycle I mentioned earlier. We should continue to see a bullish market throughout this year, regardless of outside influences. Even if prices return to their levels earlier this year, that will mean a substantial return on investment. Bitcoin in particular is seeing better ROI than any stock, bond, or mutual fund, gold, or even real estate holdings. Some alternative coins and projects are poised to see huge gains in the near future as well, like ETH, ADA, XRP, and DOT. At the end of the day, there are a lot of factors that contribute to this flux in the crypto market. While one can certainly point the finger at institutional investors, they have definitely made a huge impact. The reason for this latest correction could simply be from cyclical plateauing, FOMO, FUD, and the larger global impact of the crypto sphere itself. I'm hoping this breakdown of the market, its cycles, and its outside influences help you as you look into investing. Please keep in mind that you are taking a risk when investing or speculating in the market. However, knowledge is power, and I hope you feel smarter already. Thanks for tuning in, and I hope to see you in the next one.